Have sellers missed the best opportunity to get the most amount of money for their home? This is one of the most common questions I'm getting at the moment in talking to sellers, wondering if they should list their property now or wait. What we've seen over the last couple of months is interest rates continuing to rise, peaking right now in the mid 5% range. At the same time, we're seeing buyer demand drop off, inventory levels are rising, and inflation is becoming a bigger concern. So in today's video, we're going to talk about what it looks like to be a seller in today's housing market. And if you're a buyer out there, how you might be able to get a property at fair market value, or in some cases, may be able to get it for a little bit less than market value. I want to start today's video by being very clear. I don't think all sellers have missed the opportunity to get top dollar, but it's going to depend on a couple of different things, which we're going to touch on in today's video. But I want to start today's video and talk about interest rates. Interest rates were the key driver for the housing market over the last couple of years. Not only did we have a housing market fueled by a low supply of homes and high buyer demand, we had a market fueled by very, very low interest rates, which made the cost of owning property very, very inexpensive as opposed to rents in a lot of markets out there. And fueled by COVID and migration pattern changes and all of this crazy stuff, buyer demand was up. But what we've seen over the last couple of weeks and months is buyer demand starting to slow a little bit, inventory starting to rise, interest rates rising. In the last week, we saw the Fed come out and raise the Fed funds rate 50 basis points, which is the first jump of this kind in nearly 20 years. And they've come out and said that they're likely to do it again over the next couple of meetings to help tame inflation. So what does that look like if you're a seller? In addition to that, you've got affordability becoming the biggest concern, in my opinion, for home buyers out there. And that is fueled by the rise in interest rates that we've seen over the last couple of months, where interest rates have gone from 3% upwards to 6% for some buyers out there. So what does that actually look like from an affordability standpoint? Well, if you were buying a $300,000 home, it takes that payment from $1,264 to $1,798. That's a 42% increase. And the increase stays the same, but the higher you go up in price point, the bigger jump you're going to have. So if you bought a $750,000 home, that payment goes from $3,162 to $4,496. Again, a 42% increase of $1,334. Now, if you bought a $1 million home, you're doing the same 42% increase, but your payment's going from $4,216 at 3% to today, somewhere around $5,995. That's a $1,779 difference in your monthly payment. And in my opinion, it's likely to affect the buyers at higher price points more than it is the buyers at lower price points. And what do I mean by that? Well, while it's a 42% increase for those at the lower price points, the dollar amount is significantly less than those at the higher price points. Now, for many of you out there, you'll say, well, the lower price points, those buyers can't afford those price jumps. Maybe that's the case, but what you do have at the lower price points is you do have more buyers in theory. The higher you go in price, generally speaking, the less buyers you have that can qualify for those amounts. And with a 42% increase in payments, you're going to have even less people being able to qualify. So that might push them down with regards to their pricing, where they can now afford, that 42% increase on a $750,000 home, but they can't do it on a $1 million home. And at the same time, you do have the hedge funds, the BlackRocks, all the investment companies out there still buying homes in the lower price points. So lower price points are less likely to be affected as much as the higher price points. So you're likely to see homes build in the higher price points more than any of the other price points. But the one thing I will say about the higher price points, especially when you start getting into the luxury market, is that a lot of these people are smart money, right? They're looking to park their money in a fixed asset. With the stock market going crazy, the bond market going crazy, they're looking to just park their money, because if they keep it in cash, with the inflation rate currently at 8.5%, you're losing, $8,500 on every $100,000 you have in the bank. So if you have $1 million in the bank, you're losing nearly $85,000 over the course of a year by keeping that money parked in your checking account versus putting it into a fixed asset. So that's why I believe demand will only diminish by so much, but it is definitely going to affect the market to some extent, which is going to allow inventory to build in a lot of price points out there. So the question is, as a seller, have you missed the boat to maximize profit to get the most amount of money for your home? This is a tough question because it's going to depend on your market. While real estate is local, I think there are going to be some properties that are still able to get multiple offers, that are still able to get, above the asking price, above fair market value in many markets out there. And those homes are going to be the homes that are in pockets that are very desirable. Like here in Huntington Beach, we have several pockets where people want to live, whether it's the school district, whether it's backing to a golf course, whether it's being in a community that has amenities or what have you. Those communities are still likely to get fair market value, probably more in many instances out there when they're priced correctly. But at the same time, those homes that back to major streets, that back to freeways, the homes that have been getting top dollar out there, while they've had issues, maybe they weren't the nicest properties, maybe they needed a lot of work or what have you. Those properties have been able to maximize profit over the last couple of years as well, just because of low inventory and high buyer demand. But I do believe as demand slows, inventory builds a little bit, those are the properties that are likely to be affected the most. Now, what I've seen personally over the last couple of weeks is I've seen properties sit a little bit longer. Days on the market starting to build a little bit. Now, here in the state of California, the days on market have been around 8 days on market for the last couple of months. You're likely to see that build, maybe even double in some cases to 16 days on market. But I want to be clear here. That doesn't mean that it's a buyer's market, but if you're a buyer out there and you're starting to see properties sit a little bit longer, you're starting to see price cuts on properties, those are opportunities for you in many cases. Now, it doesn't mean you should go out and buy a property. It just means if it's the right property and you're in the market and you were going to buy anyway, maybe those are the properties you look at. The properties that are still in these desirable pockets that I mentioned earlier, the school district that everyone wants to be in and there's no inventory, those properties are still likely to get top dollar, still likely to have multiple offers, but maybe you don't have to waive all the contingencies. Maybe you don't have to go $100,000 above the asking price. Maybe it's fair market value. Each market's going to be a little bit different. So you're going to have to understand the market dynamics where you are in order to, make the best offer for you. As a seller, pricing it correctly from the start is key. Now, I've listed property here recently that I feel like is priced correctly and it's sitting a little bit longer. Why? Well, the market is starting to shift and some of these higher price points, the affordability that we talked about is having a bigger impact. When you take $1 million, purchase price, if you will, and the increase in payment is $1,700 more than it was just 3 months ago, that's a big jump for a lot of people out there. Now, for some people out there, maybe they just want to park their money, maybe they just want to buy a house and it's okay. But for a lot of people out there, they're going to sit back and wait and see what the market does. So for those sellers asking, should I sell now or should I wait? My answer most of the time is what the market is doing now. You know where interest rates are now. You know where buyer demand is now. You know where your competition is now, inventory-wise. You know where buyer demand is at the moment. You don't know what it's going to look like in 6 months or a year. But at the same time, you shouldn't be selling your property just to maximize profit with no plan, right? You need to have a plan of what you're going to do. Are you going to go rent a property? We've talked about this before. If you're going to go rent, is there something on the market or in the market that is reasonable for the price that you want to pay? I'm having conversations with sellers all the time that says, hey, look, I'm going to sell my property and go rent. And we look at the rental market out there and go, okay, what do you want to pay in rent? Well, I want to pay $4,000 a month. Okay, let's go look and see what $4,000 a month can get you. And oftentimes, it's significantly less of a property than what they're selling. And many people aren't willing to go down with what they're willing to rent or how nice it is or what have you. So just understand, if you're looking to sell, understand what is out there with regards to the market. If you are looking to rent, at the same time, if you don't have a plan, why are you selling? If you're going to sell anyway, if your plan is, hey, I'm going to sell in a year because of X, then now's as good a time as any. But at the same time, if you're just selling because you think the market's going to come down and you're going to be able to wait and buy a property for significantly less money, I don't know if that's the right call. You've got to be able to make that decision for you. Me, as a real estate agent, that's not something I'm planning to do. Personally speaking, I've been looking for the right property for me and my family here over the last couple of months to a year. And if the right property came up today, even though interest rates are higher, I would probably still buy that property because it's the right time in my life to do it. I have no plans of selling my property now, sitting on the cash and waiting for that opportunity because I've seen people do that in the past. I know people from 2018-19 that sold their homes waiting for the market to pull back. Guess what? They're still renting. So as a seller, just make sure you're making the right decision for you. You're not reading the headlines. You're not getting into this whole doom and gloom crash talk thinking the market's going to fail. Yeah, the market has appreciated. There's a lot of factors going into it, but just make sure, you're being reasonable about your decision, not irrational, and making non-emotional decisions. I know that's tough, but, people sell emotionally, they justify logically. The same thing with selling. People are selling emotionally and then trying to justify it logically. And in some cases it works out, but other cases it doesn't. So for each seller out there, it's going to be a little bit different answer for you, but just make sure you're working with a professional, somebody that's, trying to guide you and not just get you to list your house so they can make money, right? That are asking you the right questions so you can make the best decision for yourself. And if you need a professional, don't know one, don't have one in your market, do me a favor, click on this link. I network with top agents across the country. In fact, just got back from a conference where we discussed markets across the country, what's going on. So if you need a referral, do me a favor, click on that. But at the same time, if you're thinking of selling, if it's the right move for you, I've outlined a couple of questions that I think you have to ask yourself in this market in this video here. So do me a favor, check that out. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.